Hey everyone, welcome back to Talk Tickers. Today we're diving into Intuit's Q2 2025 earnings call.
Yeah, breaking down their performance, what they said, and what we can glean about their future.
I think right off the bat, their numbers are pretty impressive.
Really strong quarter.
Yeah, they posted a 17% jump in revenue, exceeding expectations and setting them up nicely for their projected double-digit growth for the year.
And I think what's particularly interesting is how they're leveraging AI, not just for their customers, but also to boost their own internal efficiency.
Yeah, it's not just about hitting the numbers, though.
Right.
This performance really points to the success of their strategic evolution into an AI-powered expert platform.
Yeah, they're calling this initiative Intuit Assist, and it's really changing the game for them.
Okay, so let's break down Intuit Assist.
Sure.
From what I understand, it's about combining AI with human expertise
Exactly.
to simplify tasks and offer solutions.
Yeah, for small and mid-sized businesses, think about things like AI converting handwritten notes into invoices.
Wow.
Or proactively suggesting solutions for cash flow issues.
Interesting.
They're even seeing a 10% increase in customer payment conversion rates when those customers use AI-generated reminders.
That's significant.
That's pretty significant.
Yeah. So Intuit Assist is really about streamlining processes,
Right.
making things easier for their customer base. But what I find really interesting is they're using AI to boost their own internal efficiency as well.
Absolutely. Intuit is seeing significant internal cost savings and productivity gains thanks to AI.
Yeah.
Think streamlining expert training programs or even boosting coding productivity.
It's incredible.
They've achieved nearly $90 million in annualized savings just in the first half of the year.
That's incredible. It seems like they're practicing what they preach, proving the potential of AI to transform operations.
Right.
But let's shift gears a bit and talk about tax season.
Sure.
Intuit's integrated TurboTax and Credit Karma platform seems to be simplifying things for taxpayers.
Their one consumer platform approach is proving quite effective.
Yeah.
For those who prefer a DIY approach, their AI helps them navigate the process and connect with an expert if needed. And for those who want full service, their platform matches them with the right expert in seconds.
Wow.
And handles data uploads automatically.
Sounds pretty convenient.
It's all about personalization and convenience.
Yeah, it sounds like they found a winning formula for both DIY and full-service tax solutions.
Right.
And they're getting great feedback on the full-service side, too.
They are.
Now, we can't forget about Intuit's ambitions beyond small businesses.
Right.
They're making a big push into the mid-market with products like QBO Advanced and their new Intuit Enterprise Suite.
This is a really smart move. The mid-market presents a huge opportunity for them.
Hold on, what exactly is the mid-market?
Think companies with revenues between $3 million to a couple $100 million.
Okay.
They need robust solutions, but at a price point that makes sense.
Yeah.
And Intuit is winning them over with a combination of ease of use, powerful features, and competitive pricing.
So they're not afraid to go head-to-head with some of the bigger players in that space.
They're not. They even mentioned closing some deals worth 6 figures annually.
Wow. It's fascinating how they're tackling two very different segments simultaneously.
Yeah.
Their established customer base and this new mid-market push.
Right.
Let's delve a little deeper into how these strategies are playing out across their various product lines.
Okay.
Starting with their business solutions, what are we seeing there?
Well, their Global Business Solutions Group saw a 19% revenue increase, which highlights how essential their offerings are for businesses navigating today's economy. It's a mix of growth from both larger and smaller businesses.
Interesting.
Which tells us they're finding success at both ends of the spectrum.
Makes sense.
Their online ecosystem, which includes everything from QuickBooks Online to their mid-market solutions, saw substantial growth. We're talking 21% overall, with a staggering 40% growth in revenue from QBO Advanced and Intuit Enterprise Suite.
So they're not just dipping their toes into the mid-market. They're making some serious waves.
Yeah, they are.
What's driving this impressive growth in their online ecosystem?
Well, a few things are contributing to their success.
Okay.
First, their core QuickBooks Online accounting revenue grew by 22%.
Right.
This is driven by a combination of price increases, a growing customer base, and a trend towards higher value plans.
Got it.
They're also relentlessly innovating and refining their go-to-market strategies, specifically targeting the mid-market with tailored solutions.
So it sounds like a well-calculated strategy that's yielding impressive results.
It is.
But their online ecosystem isn't just about accounting software, is it? What about their online services?
You're right. Their online services are also booming.
Okay.
They saw a 19% increase in revenue.
Wow.
And if you exclude MailChimp,
Huh.
which we'll get to in a moment,
Okay.
that jump is even more impressive at 30%.
All right, so,
This growth is largely fueled by their money offerings,
okay.
which encompass payments, capital bill pay, and payroll services.
So they're essentially providing a suite of financial tools that help businesses manage their operations more efficiently.
Exactly.
It seems to be resonating with their customers,
It is.
especially when we look at the 18% spike in their online payment volume this quarter.
Yeah, it's a smart approach to building a holistic business platform.
Yeah.
Now, you mentioned MailChimp,
Right.
which Intuit acquired some time ago.
Yeah.
I'm curious to hear how that integration is progressing.
Yeah, me too. Have they managed to bring those services into the fold effectively?
They're making strides.
Okay.
This quarter, MailChimp's revenue growth was driven by higher prices
Uh-huh.
and an increase in paid customers, which suggests their strategy is gaining traction.
Interesting.
But the real potential lies in how they weave it into their overall business platform,
Yeah.
allowing businesses to seamlessly manage their finances,
Yeah.
marketing, and customer interactions all in one place.
It sounds like a work in progress, but with a lot of promise. They're clearly aiming to be a one-stop shop for businesses of all sizes.
Right.
But their ambitions don't stop there, do they?
No, they don't.
They've also been talking about international expansion, right?
Mm-hmm.
Have they made any headway outside their established markets?
They're pursuing a clever, two-pronged approach to international expansion.
Okay.
In established markets, they're pushing their connected business platform.
Uh-huh.
But in newer markets,
Interesting.
they're leveraging MailChimp as their entry point.
That's a fascinating strategy.
It is.
It shows they're not just trying to replicate their success in new markets, but are adapting their approach to fit local dynamics.
Right.
That kind of agility is impressive.
It is.
But let's not forget about the desktop side of their business.
Mm-hmm.
Even in today's cloud-centric world,
Yeah,
there's still a segment of customers who rely on desktop solutions.
for sure.
How are those offerings performing?
You're right. And Intuit hasn't neglected their desktop solutions.
Okay.
In Q2, their desktop ecosystem revenue grew by a healthy 14%. And their desktop enterprise revenue actually grew in the high teens.
That's better than I would have guessed.
Mm-hmm.
What's driving that growth in the desktop segment?
Well, a key factor is their transition to a recurring subscription model for desktop solutions.
Okay.
This not only provides them with a more predictable revenue stream,
Right.
but it also allows them to deliver more frequent product updates,
Makes sense.
which keeps customers engaged and adds value.
It's almost like they're revitalizing their desktop offerings for the modern age.
Yeah, you could say that.
It's a reminder that even in the fast-paced world of technology, it's important not to dismiss the power of established products
Right.
and loyal customer bases.
Mm-hmm.
Now let's switch gears and talk about their consumer platform,
Okay.
which includes TurboTax and Credit Karma.
Right.
These are the tools they offer to help individuals navigate their personal finances,
Yeah.
especially during tax season. Their consumer group revenue grew by 3% this quarter, which is notable considering they'd initially projected a slight decline.
Interesting.
This performance underscores the strength of their offerings
Right.
and their focus on delivering a seamless customer experience across both TurboTax and Credit Karma.
Yeah, it's all coming together.
So they're exceeding expectations on the consumer front as well. Let's break it down further.
Okay.
How is TurboTax specifically performing now that we're in the thick of tax season?
They're off to a strong start.
Good to hear.
Their strategy revolves around being the go-to AI-driven expert platform for tax preparation, offering the best user experience, the fastest refunds, and the most competitive prices.
It sounds like a winning combination.
It is. And their integrated platform with Credit Karma is giving them an edge
Makes sense.
in both the DIY and assisted tax categories.
So they're really capitalizing on that integration to create a comprehensive financial hub for their users.
They are.
Let's zoom in on each segment. How are they performing in the DIY and assisted tax categories?
Absolutely.
Are they seeing similar success in both?
They're attracting a wide range of users in the DIY category,
Okay.
from those with simple tax situations to those with more complex needs.
Interesting.
Their personalized AI-powered experiences are enhancing user engagement and even driving monetization through premium features.
So they're finding ways to cater to different needs within that segment.
They are. And their full service option is getting rave reviews,
Okay.
attracting customers who prefer expert guidance throughout the process.
So they're catering to a broad spectrum of needs within the tax space,
Right.
which is smart. Now, how about Credit Karma?
Mm-hmm.
They had a phenomenal quarter last time we checked in.
They did.
Have they been able to sustain that momentum?
Yes, they have.
That's great.
Credit Karma's revenue growth accelerated again this quarter,
Yeah.
jumping to an impressive 36%.
Wow, they're really firing on all cylinders. What's behind this continued success?
Well, it's a combination of factors,
Okay.
including a favorable market environment, but there's more to it than that.
Right.
They've become a go-to destination for consumers seeking personalized financial guidance. Their data-driven insights, personalized recommendations, and user-friendly platform are attracting a large and engaged audience.
Sounds like a winning formula.
And of course, their integration with TurboTax is further strengthening their position
Right.
by offering a more holistic financial experience.
It's a great example of how strategic acquisitions can create powerful synergies when integrated effectively.
For sure.
And it seems like their investment in AI is paying off across all their product lines,
Yeah, it really is.
not just on the consumer side.
Right.
You're absolutely right. Intuit is seeing significant internal efficiency gains through their use of AI. And it's impacting everything from customer success operations to boosting coding productivity.
Absolutely.
So they're walking the walk when it comes to AI, proving its potential to transform business operations from the inside out. But we need to take a closer look at how those internal AI initiatives are translating into concrete benefits.
Okay.
Let's explore those efficiency gains in more detail.
Sure.
What are some of the specific ways they're using AI to streamline their operations and save money?
One of the most impressive examples is within their customer success organization.
Okay.
They've implemented AI-powered capabilities that have generated nearly $90 million in annualized cost savings
Wow.
in just the first half of this year alone.
$90 million in savings is nothing to sneeze at. It speaks volumes about the potential of AI when deployed strategically.
It does.
Can you give us some specific examples of how they're achieving these cost savings within their customer success operations?
Sure. They're using AI for a variety of functions.
Okay.
Think about things like expert training,
Right.
where AI can personalize training modules based on individual learning styles and knowledge gaps.
Interesting.
They're also using AI to better match customers with the right experts based on their specific needs and questions, improving resolution times and customer satisfaction. They've even automated certain workforce operations and eliminated manual data entry tasks,
Makes sense.
freeing up their human experts to focus on more complex and value-adding activities.
It sounds like they're creating a truly symbiotic relationship between AI and their human workforce,
Right?
leveraging the strengths of both to create a more efficient and effective operation.
Exactly.
It's a testament to their forward-thinking approach to integrating AI into their business processes.
Mm-hmm.
But efficiency is only one part of the equation.
Right.
What about their overall financial health?
Yeah.
Are they managing their balance sheet effectively? Do they have the resources to continue investing in growth and innovation?
They are in a very strong financial position.
Yep.
They ended the quarter with approximately $2.5 billion in cash and investments,
Wow.
giving them significant financial flexibility to pursue new opportunities and navigate any potential economic headwinds. They're clearly in a position of strength.
That's a reassuring sign for investors. And it's not just about hoarding cash, is it?
No, it's not.
They've also been actively returning capital to shareholders, right?
Absolutely.
Tell me more about their shareholder-friendly initiatives.
They've been diligently repurchasing shares to offset dilution from share-based compensation.
Okay.
In this quarter alone, they bought back $721 million worth of stock.
That's significant.
It is, which is a significant investment. It demonstrates their commitment to enhancing shareholder value and returning profits to those who have invested in their success.
That's a significant move, especially when you consider the size of their buyback program.
It is.
It's a clear signal they believe in their long-term prospects and are confident in their ability to continue generating strong returns.
Right.
But buybacks aren't the only way they're rewarding shareholders, are they? Haven't they also been increasing their dividend?
Yes, they have.
Okay, tell me about that.
Their board recently approved a quarterly dividend of $1.04 per share,
Right.
which represents a 16% increase compared to last year.
Wow, that's a pretty substantial increase.
It is a substantial increase that underscores their confidence in their long-term growth prospects and their ability to generate sustainable cash flow.
It's clear they're firing on all cylinders.
They are.
They've got strong operational performance, a robust financial position,
Right.
and a commitment to rewarding shareholders.
Yep.
It's a winning combination that should make investors very happy.
It should.
But what about their guidance for the rest of the fiscal year?
Yeah.
What are they expecting in terms of revenue growth, earnings, and key performance indicators?
Okay.
Are they maintaining their previous projections, or are they adjusting their outlook based on this strong performance?
They've actually reaffirmed their fiscal 2025 guidance, projecting total company revenue growth of 12% to 13%.
Okay, so they're not getting ahead of themselves.
No, they're not. This continued top-line growth is expected to be driven by ongoing momentum across their key business segments, including their Global Business Solutions Group and Consumer Group.
So they see this performance as sustainable
They do.
and are confident in their ability to continue executing their strategy effectively. So they're not just riding a wave, they're building a ship for the long haul.
You got it.
But revenue growth is only part of the story.
Right.
What about their earnings outlook?
Yeah.
Are they expecting to translate this revenue growth into bottom line gains?
They are.
Or are they anticipating increased investments that might impact profitability?
They're projecting strong earnings growth as well.
Okay.
They're forecasting GAAP operating income growth of 28% to 30%.
Wow, that's impressive.
It is demonstrating their commitment to driving both top-line growth and profitability.
So it's a balanced approach.
Yeah, you could say that. It's clear they're focused on delivering value to both their customers and their shareholders.
Right.
And their guidance reflects that commitment.
It's impressive to see them maintaining such a strong focus on profitability while also investing heavily in growth initiatives like AI and their mid-market expansion.
Yeah, they're doing a good job of balancing those priorities.
But let's not get ahead of ourselves.
Okay.
They've only reported for 2 quarters.
True.
What about their specific guidance for the 3rd quarter of fiscal 2025?
Right.
What are they expecting in terms of revenue and earnings for this crucial period?
For Q3, they're projecting total company revenue growth of 12% to 13%,
Okay.
which is consistent with their full-year guidance.
All right.
They're also expecting GAAP earnings per share of $9.22 to $9.28
Wow.
and non-GAAP earnings per share of $10.89 to $10.95.
Those are strong numbers.
They are, especially considering that Q3 is typically a seasonally strong quarter for them.
Makes sense. It seems like they're well positioned to deliver another impressive performance.
It seems that way.
It certainly sounds like they're on track for another great quarter.
It does.
Their strong Q2 results and solid Q3 guidance give investors a lot to be excited about.
For sure.
But their success isn't just about hitting quarterly targets.
Right.
It's about their long-term vision and their ability to adapt to the constantly evolving market landscape.
Absolutely.
Let's shift our focus to their long-term growth strategy.
Okay.
What are the key pillars of their plan to sustain their impressive growth trajectory
Right.
and continue delivering value to both customers and shareholders?
They've laid out a clear and compelling vision for the future.
Okay.
Their long-term growth strategy revolves around 3 key pillars:
I was going to say.
becoming an AI-driven expert platform,
Okay.
expanding their presence in the mid-market,
Uh-huh.
and delivering exceptional customer experiences.
So essentially building on what they're already doing well.
Yeah, exactly.
Yeah.
These 3 pillars work together to create a flywheel for sustainable growth.
Those pillars certainly seem to align with the trends we've been discussing.
They do.
Their AI-driven expert platform is clearly at the heart of their strategy.
Right.
They're leveraging AI to automate tasks, streamline workflows, and empower their human experts to deliver even more personalized guidance and support.
Exactly.
It's a powerful combination that seems to be resonating with their customers.
It is.
But their focus on the mid-market is also a crucial part of their growth plan.
For sure.
How are they differentiating themselves in that crowded and competitive space?
You're right, the mid-market is a tough nut to crack.
It is.
But Intuit seems to be finding its footing.
Okay.
They're winning over mid-market customers with their user-friendly platforms, robust features, and competitive pricing.
It's a classic Intuit playbook.
It is.
Disrupt a market with intuitive solutions that are accessible to a wider audience.
Exactly. They're essentially replicating the strategy that made them so successful with small businesses.
Right.
But on a larger scale,
It's a smart move. They're leveraging their core strengths and applying them to a new market with significant growth potential.
right.
But it's not just about technology and market positioning. Their commitment to delivering exceptional customer experiences is also a key part of their long-term strategy.
Absolutely.
How are they differentiating themselves on the customer experience front?
They're relentless in their pursuit of customer satisfaction.
Okay.
They're constantly investing in ways to enhance their customer interactions, from their intuitive user interfaces to their personalized support channels.
So they're really going above and beyond.
They are. They understand that in today's competitive landscape, customer loyalty is paramount.
It is.
They're not just building products, they're building relationships.
It's a customer-centric approach that's clearly paying off.
It is.
Their impressive financial results and the positive feedback we're hearing from their customers speak volumes about the effectiveness of their strategy. But how does their performance stack up against their competitors in the financial technology space?
Right.
Are they leading the pack or are they playing catch-up?
Intuit is a standout performer in the fintech industry.
Okay.
They're consistently outpacing their competitors in terms of revenue growth, profitability, and innovation.
It sounds like they're really setting the bar.
They are. They're not just keeping pace with the industry, they're setting the pace.
That's impressive.
Their ability to adapt to the changing market landscape, embrace new technologies, and deliver exceptional customer experiences has set them apart from the pack.
It's remarkable to see a company of their size and maturity maintain such a high level of innovation and growth.
It is.
They're clearly not resting on their laurels.
Yep.
Now let's take a moment to synthesize what we've learned from this deep dive into Intuit's Q2 2025 earnings call.
Okay.
What are the most important things investors should keep in mind as they evaluate this company's performance and prospects?
First and foremost, Intuit is firing on all cylinders.
It certainly seems that way.
They're exceeding expectations across the board.
Right.
They're delivering exceptional financial results with robust revenue growth, expanding profitability, and a strong balance sheet.
So financially, they're in a good place.
They are. They're a well-managed company that's generating significant cash flow and returning value to shareholders through share buybacks and dividends.
It's clear they're in a position of strength, both operationally and financially. But their success isn't just about numbers. What else should investors be paying attention to?
Their strategic shift to become an AI-driven expert platform is a key differentiator.
Yeah, we talked about that.
They're not just talking about AI.
Right.
They're implementing it in meaningful ways that are driving tangible results.
Yeah.
From cost savings and efficiency gains to personalized customer interactions and revenue growth.
It sounds like it's really baked into their operations.
It is. Their AI initiatives are proving their worth.
Their AI-driven approach seems to be a game changer for them.
Yeah, it really is.
But they're also making smart moves in terms of market expansion.
Right.
Their push into the mid-market is a strategic bet that's already showing promising results. They're targeting this underserved segment with their user-friendly platforms, robust features, and competitive pricing.
Right.
And they're winning over customers.
They are.
It's a classic Intuit playbook that's working once again.
It is.
Absolutely. Their ability to identify and capitalize on market opportunities is a testament to their strategic vision. But they're not just chasing growth at all costs.
Right.
Their commitment to delivering exceptional customer experiences is also a core part of their success.
Absolutely. They understand that customer loyalty is essential for sustainable growth.
It is.
And they're investing heavily in building those relationships.
Their customer-centric approach is a key differentiator in a crowded market.
It is.
But what about their long-term prospects? Are they positioned to continue this impressive performance in the years to come?
Their long-term growth strategy is well-defined and clearly articulated.
Okay.
They're focused on becoming an AI-driven expert platform, expanding their presence in the mid-market, and delivering exceptional customer experiences.
So continuing down this path.
Yeah, exactly. These strategic pillars are interconnected and mutually reinforcing, creating a powerful flywheel for sustainable growth. They're on the right track to achieve their long-term goals.
It's an impressive roadmap for the future.
It is.
They've got the vision, the strategy, and the execution to continue their success. Now, before we wrap up this part of our deep dive, let's take a moment to acknowledge the elephant in the room.
Sure.
Intuit is betting big on AI.
Right.
And while it's clearly paying off for them now, there are potential risks and challenges associated with this reliance on technology.
Yeah, there are.
It's something investors need to be aware of as they assess Intuit's long-term prospects. You're absolutely right. While AI offers tremendous potential,
It does.
it's important to be mindful of the potential downsides.
Right.
For instance, there's the issue of algorithmic bias.
Uh-huh.
If AI algorithms are trained on biased data, they can perpetuate and even amplify existing societal biases,
Right.
leading to unfair or discriminatory outcomes.
That's a valid concern.
This is something Intuit needs to be very careful about
For sure.
as they continue to develop and deploy their AI systems.
Absolutely.
They need to ensure their AI is trained on diverse and representative data sets,
Right.
and that they have mechanisms in place to detect and correct for bias.
Mm-hmm.
Algorithmic bias is a serious concern that can't be ignored.
It can't.
But there are other potential challenges as well, right?
Yeah, there are.
What about the impact of AI on employment?
Right.
As AI becomes more sophisticated, it has the potential to automate tasks currently performed by human workers, leading to job displacement and economic disruption. How is Intuit addressing this concern?
It's a valid concern. As Intuit automates more tasks,
Right.
it's crucial that they invest in retraining programs for their workforce
Okay.
and help their employees acquire the skills they need to thrive in an AI-powered world.
That makes sense.
They also need to consider the broader societal impact of their AI initiatives
Yeah.
and work with policymakers and other stakeholders to ensure a just and equitable transition to an AI-driven economy.
It's clear that AI is a powerful tool that needs to be wielded responsibly.
It does.
Intuit has a responsibility to consider both the benefits and the potential downsides of their AI initiatives, and to take steps to mitigate any negative impacts.
Absolutely. They also need to be mindful of data privacy and security.
Right, as they collect and process vast amounts of sensitive customer data, they have a responsibility to protect that information from unauthorized access, use, or disclosure. Data breaches can have severe consequences both for the company and its customers. Intuit needs to invest in state-of-the-art security technologies, implement strong data governance practices,
Yeah,
and comply with all applicable privacy regulations.
for sure.
Data privacy and security are paramount in today's digital world.
They are.
But there's another challenge that's often overlooked when it comes to AI.
Okay. Transparency and explainability.
As AI systems become more complex, it can be difficult to understand how they make decisions.
Right.
This lack of transparency can raise concerns about accountability and fairness. How can Intuit address these concerns?
It's crucial for Intuit to develop AI systems that are transparent and explainable.
Yeah.
They need to be able to provide clear explanations for how their AI algorithms make decisions and ensure that those decisions are fair, unbiased, and consistent with human values.
Right. It's not just about the technology itself.
No, it's not.
It's about how it's used and the potential impact it can have.
Exactly. This requires a commitment to ethical AI development and a willingness to engage in open and honest conversations about the potential impact of AI on society.
These are all important considerations as Intuit continues to embrace AI.
They are.
It's a powerful technology with the potential to revolutionize their business and the world, but it's not without its risks and challenges.
Right.
They have a responsibility to use AI ethically and responsibly, and to be transparent about their approach.
Absolutely. Their success will depend not only on their technological prowess,
Right.
but also on their commitment to using AI for good.
Well said.
Yeah.
It's a delicate balance that requires careful consideration and a long-term perspective.
It is.
Now, before we move on to the next part of our deep dive,
Okay.
let's have a little fun with our This Is Not Financial Advice segment,
Right?
where we explore a hypothetical trade idea based on Intuit's performance and future prospects.
Sounds good.
Are you ready to get speculative?
I'm all ears.
Yeah.
Hit me with your wildest Intuit trade idea.
What if, building on their success in the financial services space and their massive customer base, Intuit decides to launch their own digital bank?
Okay.
Imagine Intuit Bank,
Interesting.
seamlessly integrated with QuickBooks, TurboTax, and Credit Karma.
I like it.
They could offer a full suite of financial products and services tailored to the specific needs of their small business and individual customers.
Intuit Bank. That's a bold idea.
Yeah.
But knowing Intuit, I wouldn't rule it out.
Right.
They've already dipped their toes into financial services with their money offerings.
Right.
It wouldn't be a huge leap for them to offer checking and savings accounts,
Oh, wow.
loans, and even investment products.
Yeah.
All within a single intuitive platform.
Exactly.
And they could leverage their vast data and AI capabilities to provide personalized financial advice and help their customers make smarter money decisions.
Exactly. They could become a one-stop shop for all things financial.
Yeah.
Leveraging their existing brand loyalty and customer trust to disrupt the traditional banking industry.
Interesting.
It would be a game changer for them
It would.
and for the millions of customers who rely on their products and services.
Sure.
But before anyone rushes out to buy Intuit stock based on this wild idea,
Yeah.
remember this is purely hypothetical and not financial advice.
Right.
We're just exploring possibilities and having some fun.
Always a good reminder. It's just fun to think about the potential future scenarios for a company like Intuit.
Right.
They've got a history of innovation and disruption.
Exactly.
Who knows what they'll come up with next?
That's the beauty of following a company like Intuit.
It is.
They're constantly pushing the boundaries of what's possible. All right, that wraps up part 1 of our deep dive into Intuit's Q2 2025 earnings call.
Okay.
Stay tuned for part 2, where we'll delve deeper into their specific product lines, their international expansion plans, and their competitive landscape. We'll be right back after a short break.
Welcome back to Talk Tickers.
All right, so we just took a look at some potential risks and challenges for Intuit. But now let's dive back into the specifics of their business.
Oh.
Starting with their different product lines.
Sure.
QuickBooks is obviously their flagship product.
It is.
So let's start there. What can you tell us about the performance of their various QuickBooks offerings?
QuickBooks remains the cornerstone of their business.
It does.
And it's performing exceptionally well.
Good.
Their flagship product, QuickBooks Online, saw a 22% revenue increase this quarter.
That's a healthy growth rate for such a mature product. What's driving that continued success?
Well, it's a combination of factors. They're attracting new customers, but they're also seeing existing customers upgrade to higher value plans with more features and functionality.
That makes sense.
And they're constantly innovating, adding new features and integrations to keep QuickBooks relevant and valuable for businesses of all sizes.
So they're not just resting on their laurels.
No, they're not. They're actively evolving it to meet the changing needs of their customers.
Now, we talked earlier about their push into the mid-market.
Right.
With products like QBO Advanced and Intuit Enterprise Suite. How are those offerings performing? Are they gaining traction with larger businesses?
They are. QBO Advanced and Intuit Enterprise Suite are seeing strong growth.
Good.
Particularly QBO Advanced, which saw a 40% jump in revenue this quarter.
That's a pretty significant increase.
It is. It's clear they're finding success in attracting mid-market customers who are looking for a more robust and scalable solution than traditional QuickBooks Online.
So they're hitting the mark with that segment.
They are. That 40% growth rate is impressive.
It is. It seems like they found a sweet spot in the mid-market, offering a compelling alternative to the more complex and expensive enterprise solutions out there.
Right.
But their business solutions portfolio goes beyond just accounting software, doesn't it?
You're right.
They also have a suite of online services that cater to various business needs.
They do?
Let's talk about those.
Okay.
What are some of the key online services they're offering, and how are they performing?
Their online services are a key part of their growth strategy.
Okay.
They offer a wide range of services, including payments, payroll, and capital solutions.
Okay.
These services are integrated seamlessly with their accounting software,
Right.
creating a holistic platform that helps businesses manage their entire financial operations.
So they're really trying to be that one-stop shop for businesses.
They are. It's a compelling value proposition for business owners
It is.
who are looking to streamline their operations and focus on growth.
Now let's talk about a more recent addition to their portfolio.
Yeah.
MailChimp. They acquired MailChimp a while back.
Right.
With the vision of integrating it into their QuickBooks ecosystem to create a more comprehensive business platform. How's that integration coming along?
It's still a work in progress, but they're making good progress. They've started integrating MailChimp's marketing automation and email marketing capabilities into QuickBooks, allowing businesses to manage their customer communications and marketing campaigns alongside their financial data.
That makes sense.
It's a powerful combination that has the potential to transform how businesses interact with their customers.
It sounds like a smart move. Integrating those two platforms could give them a real edge in the market.
It could.
So it sounds like they're taking a measured approach to the integration, ensuring that MailChimp fits seamlessly into their existing ecosystem.
Right.
It's a smart strategy, as rushing the integration could alienate existing QuickBooks users
It could.
or create a confusing user experience.
It's all about finding that balance.
Now, their focus hasn't been solely on product development and integration.
Right.
They've also been talking about expanding their reach internationally. What can you tell us about their international expansion plans?
Sure.
Are they targeting specific regions or taking a more global approach?
They're taking a two-pronged approach to international expansion.
Okay.
In established markets like Canada, the UK, and Australia, they're leading with their connected business platform, offering QuickBooks and their suite of online services.
So playing to their strengths in those markets?
Exactly.
Yeah.
But in newer markets,
Okay.
they're focusing on MailChimp as their entry point,
Interesting.
leveraging its popularity and ease of use to gain a foothold.
It's a smart strategy that allows them to tailor their approach to different market dynamics.
It does.
In mature markets with established accounting software preferences,
Right.
they're leading with their core competency. But in newer markets where brand recognition is less established,
Yeah.
they're using MailChimp as a gateway to introduce businesses to the Intuit ecosystem.
That's right.
It's a nuanced approach that demonstrates their adaptability and strategic thinking.
For sure.
Now, we've talked a lot about their cloud-based offerings,
Right.
but they still have significant desktop business. In a world that's rapidly moving to the cloud, how are their desktop products holding up?
Yeah, good question.
Are they still seeing growth, or are they becoming a legacy business?
Their desktop business is surprisingly resilient.
Okay.
While the overall trend is definitely towards cloud-based solutions, they're still seeing growth in their desktop offerings,
Right.
particularly in the enterprise segment.
Interesting.
Their desktop enterprise revenue grew in the high teens this quarter.
That's impressive. What's driving that continued growth in their desktop business?
Well, it's a mix of both.
Okay.
They're still attracting new customers who prefer the familiarity and control of desktop solutions.
Right. Some people just like what they're used to.
They do, but they're also doing a good job of serving their existing desktop customer base.
Okay.
Offering them updates and support to ensure they continue to get value from their investments.
That's important.
It is. And their transition to a subscription model for desktop products has also helped to stabilize revenue and provide a more predictable income stream.
So they're finding ways to adapt their desktop business to the changing market.
They are. It's a smart move. By offering a subscription option, they're providing a more compelling value proposition for desktop users,
Right.
giving them access to ongoing updates and support. It's a win-win for both Intuit and their customers.
Now let's shift our focus to their consumer business,
Okay.
which is anchored by TurboTax and Credit Karma.
Right.
These products are essential for millions of people during tax season and beyond.
They are.
How are they performing in this increasingly competitive market?
Their consumer business is a powerhouse.
That's good to hear.
TurboTax remains the dominant player in the tax preparation software market.
Yeah.
And Credit Karma is rapidly becoming the go-to platform for personal finance management.
So they're really covering both ends of the consumer finance spectrum.
They are. Their integrated consumer platform is attracting millions of users and driving strong revenue growth.
It sounds like they've created a formidable duo in the consumer finance space.
Yeah.
Let's break it down further.
Okay.
How is TurboTax specifically performing? Are they maintaining their market share, or are they facing increased competition from newer entrants?
TurboTax is still the king of the hill when it comes to tax preparation software. They're holding onto their market share and continuing to innovate, adding new features and integrations to make tax filing easier and more convenient for users.
So they're not just sitting back and watching the world go by.
No, they're not. Their AI-powered features are particularly popular,
Right.
helping users navigate the complexities of the tax code and identify potential deductions and credits.
It sounds like they're not taking their market dominance for granted.
They're not. They're constantly evolving TurboTax to stay ahead of the competition and provide the best possible user experience.
Now, let's talk about Credit Karma.
Okay.
They've been on a tear lately,
Yeah, they have.
with impressive revenue growth and user engagement. What's driving that success?
Credit Karma has become the go-to destination for consumers seeking personalized financial guidance.
Okay.
Their free credit monitoring tools, financial product recommendations, And educational resources are attracting millions of users.
It makes sense. People are always looking for ways to improve their financial health.
They are who are looking to improve their financial well-being.
And their integration with TurboTax has created a seamless experience for users who need to access their financial information during tax season.
Exactly. It's all connected.
It sounds like they're providing a valuable service to consumers
They are.
who are often overwhelmed by the complexities of personal finance. By offering free tools, personalized recommendations, and a user-friendly interface.
Right.
They're empowering consumers to take control of their finances.
Exactly.
But it's not just about attracting new users.
Right.
They're also doing a good job of monetizing their platform, right?
They are.
How are they generating revenue from Credit Karma?
They generate revenue primarily through partnerships with financial institutions.
Okay.
They offer a marketplace where users can compare and apply for credit cards, loans, and other financial products.
So they're acting as a middleman.
In a way, when a user applies for a product through Credit Karma, they receive a commission from the financial institution.
So it's performance-based.
It is. It's a win-win for everyone involved.
Makes sense.
Consumers get access to a wide range of financial products. Financial institutions get access to a highly qualified audience.
Right.
And Credit Karma generates revenue.
It's a smart business model that leverages their large user base and data insights to create value for both consumers and their financial partners.
Exactly.
It's clear that their consumer business is firing on all cylinders.
It is.
And their integrated platform is a powerful force in the personal finance market.
For sure.
But their success isn't just limited to their products and services.
Right.
They've also made significant investments in their internal operations, particularly in the area of AI.
Yeah.
We talked earlier about their impressive cost savings from AI initiatives.
I did.
But I want to delve a little deeper into how they're using AI to transform their operations.
Oh, okay.
What are some specific examples of how they're leveraging AI across their business?
They're using AI in a variety of ways to improve efficiency, productivity, and customer satisfaction.
Right.
One area where they're seeing significant impact is in customer support. They've implemented AI-powered chatbots that can handle routine customer inquiries.
So freeing up their human agents to handle the more complex issues.
Exactly, freeing up their human support agents to focus on more complex issues.
It sounds like a really smart way to use AI.
It is. They're also using AI to personalize the customer support experience, routing customers to the most appropriate agent based on their specific needs and previous interactions.
So it's all about making that customer experience as smooth and efficient as possible.
It is. It sounds like they're using AI to streamline their customer support operations and make it more efficient and effective.
But their AI initiatives go beyond just customer support, don't they?
They do.
What other areas of their business are they transforming with AI?
They're using AI to enhance their product development process. Using machine learning algorithms to analyze user data and identify areas for improvement.
So they're using data to drive product innovation.
Exactly. They're also using AI to optimize their marketing campaigns. Targeting customers with personalized messages and offers based on their individual preferences and behavior.
So it's all about getting the right message to the right person at the right time.
It is. And they're even using AI to improve their internal operations. Automating tasks and workflows to free up their employees to focus on more strategic work.
It sounds like they're embedding AI into the very fabric of their business.
They are. It's a comprehensive approach that's transforming how they operate and interact with their customers.
It's impressive to see a company embrace AI so wholeheartedly.
It is.
And it seems to be paying off for them.
It does.
But their success isn't just about technology. It's also about their culture and their commitment to innovation. What can you tell us about their culture and how it's contributing to their success?
Intuit has a very strong culture of innovation and customer centricity. They're constantly experimenting with new ideas, testing new approaches, and seeking feedback from their customers.
So they're not afraid to try new things.
They're not. They encourage their employees to think outside the box, challenge assumptions, and take risks.
It sounds like a very dynamic and engaging work environment.
It is. This culture of experimentation and learning has allowed them to stay ahead of the curve and adapt to the rapidly evolving market landscape.
It's clear that their culture is a key driver of their success.
It is.
They're not afraid to try new things, fail fast, and learn from their mistakes.
That's how you innovate.
This agility and willingness to embrace change has allowed them to remain relevant and competitive
Right.
in a rapidly evolving industry.
For sure.
Now, before we move on to our This Is Not Financial Advice segment,
Okay.
I want to take a step back and look at the bigger picture.
Right.
What are your overall thoughts on Intuit's performance and prospects?
Sure.
Are they a company that investors should be excited about?
Intuit is a remarkable company with a long history of success.
They are.
They've consistently delivered strong financial performance,
Mm-hmm.
innovative products, and exceptional customer experiences.
They really have.
They're a leader in their industry,
Uh-huh.
and they're well-positioned for continued growth in the years to come.
It's impressive to see a company maintain that level of success over such a long period of time.
It is. They're a company that's firing on all cylinders, and I believe they have a bright future ahead of them.
It's an inspiring story of a company that's constantly evolving and reinventing itself to stay ahead of the curve. They're a company that's worth watching closely,
Mm-hmm.
and I'm excited to see what they accomplish in the years to come.
Me too.
But for now, let's have some fun with our This Is Not Financial Advice segment,
All right, let's do it.
where we explore a hypothetical trade idea based on Intuit's performance and future prospects.
Okay.
Are you ready to let your imagination run wild?
I'm always up for a little speculation. Let's hear your wildest Intuit trade idea.
All right, here it is.
Okay.
What if Intuit, with its dominant position in the small business and consumer finance markets, decides to launch its own cryptocurrency?
Wow. Okay.
Imagine Intuit Coin,
Interesting.
seamlessly integrated with QuickBooks, TurboTax, and Credit Karma.
I like where this is going.
Small businesses could use it to pay their employees.
Uh-huh.
Consumers could use it to pay their taxes.
Oh,
And everyone could use it to transact within the Intuit ecosystem.
so they're creating their own financial ecosystem.
Exactly. It would be a game changer for the world of finance.
Intuit Coin. Now that's thinking outside the box.
Right.
It's a bold idea, but it's not entirely far-fetched.
It's not.
Intuit has a history of disruption.
They do.
They've already dipped their toes into financial services with their money offerings.
Right.
Creating their own cryptocurrency would be a logical next step.
Exactly.
They have the technology, the brand recognition, and the customer base to make it a success.
Exactly. They could create a whole new financial ecosystem
Yeah.
built on the principles of transparency,
Uh-huh.
security, and accessibility.
Interesting.
Intuit Coin could become the currency of choice for small businesses and consumers everywhere.
I could see it happening.
But before anyone rushes out to buy Intuit stock based on this wild idea,
Right.
remember this is purely hypothetical and not financial advice.
Of course.
We're just having a little fun exploring the boundaries of what's possible.
It's always a good reminder. It's just fun to think about the potential future scenarios for a company like Intuit.
It is.
They've got a track record of innovation and a willingness to push the boundaries. Who knows what they'll come up with next?
That's what makes them such a fascinating company to follow. All right, that wraps up part 2 of our deep dive into Intuit's Q2 2025 earnings call.
Okay.
Stay tuned for part 3, where we'll delve into their competitive landscape, their long-term growth strategy, and some key takeaways for investors. We'll be right back after a short break.
Welcome back to Talk Tickers. We've been taking a deep dive into Intuit's Q2 2025 earnings call.
Yeah, and it's been a wild ride. They're doing some pretty amazing things.
They are, but no company operates in a vacuum. So let's zoom out a bit and look at the competitive landscape they're navigating.
Okay, good point. Who are Intuit's main rivals, and how do they stack up against the competition?
Well, in the small business accounting software space, their biggest competitor is Xero,
Right, I've heard of them.
a cloud-based accounting software company that's been gaining traction in recent years. However, Intuit still holds a commanding market share lead.
Okay, so they're still the top dog.
They are thanks to their strong brand recognition, extensive feature set, and robust ecosystem of partners and integrations.
So it's a David and Goliath situation, with Xero nipping it into its heels. But it sounds like Intuit is holding their ground for now.
They are for now. What about in the mid-market? Who are they going head-to-head with there?
Yeah, that's a good question. They're trying to make inroads there, right?
They are. In the mid-market, they face competition from more established players like Sage and NetSuite.
Okay, yeah, those are big names.
They are who offer enterprise-grade solutions tailored for larger businesses. However, Intuit is carving out a niche
How so?
by offering a more user-friendly and affordable alternative to these traditional enterprise solutions.
Right.
Their strategy is to win over mid-market customers who are looking for a more intuitive and cost-effective solution without sacrificing functionality.
It's a clever strategy. They're positioning themselves as the Goldilocks solution for the mid-market.
Yeah, exactly.
Not too basic, not too complex, but just right. Now, we can't forget about their consumer business.
Right.
TurboTax and Credit Karma are dominant forces in their respective markets.
They are.
But they're not without competition. Who are the main players vying for market share in those spaces?
In the tax preparation software market, TurboTax's primary competitor is H&R Block.
Right, another big name.
Another well-established brand with a long history in the tax industry. However, TurboTax has managed to maintain its market leadership.
So they're still on top.
They are by offering a more user-friendly and feature-rich experience, particularly in the online space.
Makes sense. And their integration with Credit Karma gives them a unique advantage.
Right.
By providing users with a more holistic view of their financial situation.
Exactly.
So they're leveraging their ecosystem to create a more compelling value proposition for consumers. What about Credit Karma? Are they facing similar competition in the personal finance space?
Credit Karma's biggest competitors are credit bureaus like Experian and Equifax, who offer similar credit monitoring and financial management tools. However, Credit Karma has differentiated itself.
How so?
By offering a free and user-friendly platform that caters to a wider audience.
Smart Move Free is always a good price point.
It is. They've also expanded their offerings beyond just credit monitoring, providing tools for personal loans, credit cards, and even insurance.
It sounds like they're positioning themselves as a one-stop shop for all things personal finance.
They are, which is a smart move in today's increasingly complex financial landscape.
Now, we've talked a lot about Intuit's competitive landscape.
Right.
But it's important to remember that their success ultimately hinges on their ability to execute their long-term growth strategy.
Absolutely.
We touched on their 3 key pillars earlier, becoming an AI-driven expert platform, expanding into the mid-market, and delivering exceptional customer experiences. Let's explore those pillars in more detail and see how they're translating into tangible results. So, starting with AI, how are they leveraging AI to enhance their business and drive growth?
Their commitment to becoming an AI-driven expert platform is evident in everything they do, from their AI-powered features in QuickBooks and TurboTax, to their use of AI to streamline customer support and optimize marketing campaigns.
Sounds like a comprehensive approach.
It is. They're leveraging AI to enhance every aspect of their business, and it's paying off.
In what ways?
They're seeing increased efficiency, productivity, and customer satisfaction as a result of their AI initiatives.
So it's not just a buzzword for them. They're actually putting it into practice in meaningful ways.
Exactly. But their growth strategy isn't just about technology.
Right, we talked about that. What about their expansion into the mid-market? How's that going?
It's going well. Their mid-market offerings, such as QBO Advanced and Intuit Enterprise Suite, are gaining traction.
Good.
Particularly among businesses that are looking for a more user-friendly and affordable alternative to traditional enterprise solutions. They're winning over customers by offering a balance of features, functionality, and price that meets the specific needs of this segment.
So they're finding success by tailoring their offerings to the specific needs of the mid-market.
They are, but technology and market expansion aren't enough.
Right. What about the customer experience? How are they ensuring that their customers are happy and coming back for more?
They're obsessed with customer satisfaction.
Good.
They're constantly investing in ways to enhance their customer interactions. From their intuitive user interfaces to their personalized support channels.
So they're really focused on making it easy and enjoyable for customers to do business with them.
They are. They're actively soliciting feedback from their customers and using that feedback to improve their products and services. This customer-centric approach is a core part of their DNA.
It sounds like it. And it's a major reason for their continued success. But their commitment to excellence extends beyond just their customers. They're also focused on creating a positive and supportive work environment for their employees.
Absolutely.
What can you tell us about their culture and how it's contributing to their success?
Intuit has a reputation for being a great place to work.
Okay, I've heard that.
They foster a culture of innovation, collaboration, and continuous learning.
Sounds like a pretty ideal workplace.
It is. They empower their employees to take ownership of their work, make decisions, and drive positive change. This sense of ownership and empowerment is reflected in the quality of their products and services, and it's a key driver of their success.
It's clear that their employees are a major asset, and they're investing in their development and well-being.
For sure.
It's a smart strategy that's paying off in terms of employee satisfaction, retention, and ultimately business results. Now, as we wrap up this deep dive into Intuit's Q2 2025 earnings call,
Okay.
I want to leave our listeners with some key takeaways.
All right.
What are the most important things investors should keep in mind as they evaluate Intuit's performance and prospects?
Here are a few key takeaways for investors.
I'm listening.
First, Intuit is a well-managed company with a proven track record of success.
Right.
They've consistently delivered strong financial performance, innovative products, and exceptional customer experiences.
It's a pretty solid track record.
It is. They're a leader in their industry, and they're well-positioned for continued growth.
So they've got a solid foundation to build on. What else should investors be paying attention to?
Second, they're making smart strategic bets on the future.
Okay.
Their focus on AI, their expansion into the mid-market, and their commitment to customer centricity are all initiatives that are likely to drive future growth.
Right.
They're not afraid to disrupt themselves and embrace change,
Uh-huh.
which is essential for long-term success in today's rapidly evolving business landscape.
They're clearly thinking ahead and positioning themselves for the future. What else stands out?
Third, they have a strong competitive position in their key markets.
Makes sense.
They're fending off competition from both established players and newer entrants
Right.
by offering a compelling combination of features, functionality, and price.
Right.
They're also leveraging their ecosystem to create a more holistic and integrated experience for their customers.
So they're not just competing, they're innovating and differentiating themselves in meaningful ways.
Yeah.
Any final thoughts for investors?
Finally, they have a talented and dedicated workforce that's passionate about their mission. Their culture of innovation, collaboration, and customer centricity is a major asset that's driving their success.
So they've got the people, the products, and the vision to continue their success. It sounds like they're a company that's built to last.
They are, and they're worth considering for any long-term investment portfolio.
Well, that about wraps up our deep dive into Intuit's Q2 2025 earnings call.
It does.
We've covered a lot of ground today.
We have.
From their impressive financial performance to their ambitious long-term growth strategy, they're a company that's firing on all cylinders.
Absolutely.
And they're definitely worth keeping an eye on.
They are.
Thanks for joining us on Talk Techers.
Until next time, keep diving deep.